Can you imagine your portfolio going down by 60%? Let's say you have a portfolio worth of 10 lakhs. Suddenly, in a couple of months, the portfolio is down to 4 lakhs. Can you imagine that scenario, how hard it would have been? That exactly what happened during financial crisis in 2007. If you look at the lowest point of financial crisis, the portfolio of Nifty 50 alone would have went down by 55%. That's a lot. And this is where we see the extreme cases of the risk from the equity market, right? We see how risky equity markets are during these times, and this is where we need to understand the concept of diversification, right? Where most of us cannot stomach a 60% loss in our portfolio, right? So I was going through other products in the Indian market like mutual funds and ETFs to see are there any products that gives me equity exposure, but also at the same time it's well diversified. And I came across this interesting product which has an AUM of about 200 crores, not a lot. It's called the Aditya Birla Financial Planning Fund. So it's kind of a diversifying kind of a product. It has equity allocation, bond allocation, a bit of gold, and also money market allocations, right? So it's on the aggressive side. So they have three plans. So they have aggressive, conservative, and moderate. So depending on the equity allocation, you can choose one of these three types offered by Aditya Financial Planning Fund, right? So aggressive, obviously it's on the higher end, which means that equity allocation is much more. It's around 65 to 70% than the debt and gold allocation. But you also get the diversification from gold and debt, and you don't need to actively act on buying a debt or gold fund. One downside to this is that you don't have the control over the allocations, right? The fund manager will take care of those allocations. So as always, let's compare this to a Nifty 50 benchmark, right? So the first impressive thing about this fund is that, which surprised me, was it has been in line with Nifty 50, and recently it has even outperformed Nifty 50, which is amazing. So before even getting into this analysis, I was expecting this fund to maybe slightly underperform because you also have bond allocation, gold allocation, so it's not all in on equities, right? So expecting it to slightly underperform, but for a diversified portfolio outperforming Nifty 50, which is impressive. Another thing that surprised me was sudden increase in excess returns during COVID. I'll explain in a bit why that happened, but again during COVID you could see an excess return, which is again a great thing to know about this fund when you are considering this fund, right? And if you see the correlation between Nifty 50 and this Aditya fund it's pretty high. It's 0.93, right? You get the high exposure to Nifty 50, but also you are outperforming it with a good diversification. If you see here, as we already discussed about the high allocation to Nifty 50, right? So it's basically tracking a bit of the market itself. So it's not as high as one, which is it's simply tracking Nifty 50. It's diluted, so it's not. It's low volatile than Nifty 50, right? So that's why you're seeing around 0.6, 0.7 beta exposure to Nifty 50. So I mentioned to you that I will explain what happened during COVID crisis, right? So we can see that sudden increase in bond exposure during COVID, and that made your portfolio much more resilient to COVID crisis. Another interesting thing to know about this fund, even without looking into the holdings of this fund, is the consistent size exposure of this fund. So when you go through the holdings, you can see a lot of small cap and mid cap funds and also multi cap funds which have a lot of high exposure to size factor. So you can, from this analysis, you can see that you can conclude that it has a good chunk of allocation to the small cap category. And another thing I wanted to point out is for a diversified product, right, it has outperformed Nifty 50 6 out of 12 years, and also it has generated alpha, 11 out of 8 years, right? So when you buy this fund, I think it's not basically about the outperformance that when I was analyzing fund, I was not explicitly looking for outperformance, but the diversification aspect of it was interesting to me. But at the same time, you also are in line with the Nifty 50, and recently it has even outperformed Nifty 50, right? Which is a great thing, for a fund with 12 years of track record, right? Another thing to know about this fund is how volatile this fund is. It's not as volatile as Nifty 50. So if you see the volatility of this fund, it's 10.3 compared to 16%. Of 16%, which is Nifty 50, right? So it is less volatile, and it has done, again, we saw this performance chart, it has done in line, and recently it has outperformed Nifty 50. And if you see the rolling drawdown, that is the maximum loss during any point in time, during COVID it went down by 18% compared to Nifty 50's 30%. So you're getting the best of both worlds, which is great to know. And at the end, you have this product. What are the other products out there similar to this? So I picked up some of the funds which doesn't have the same name as financial planning, but what they all do is they allocate to equities, bonds. Some just concentrate on equity, bonds, and money markets. Some concentrate on also investing in a bit of gold. So when I was going through the peer analysis, which is what we are doing here, the Mahindra Manulife hybrid fund, which invests in equities, debt, and money markets, it has outperformed all its peers in this equity debt category, right? If you look at the expense ratio, the Mahindra Manulife, which has outperformed, is charging way lower, like about 0.25% lower than the Aditya and its counterparts, right? The highest was the HDFC retirement savings, which again invests between equities and bonds. As we already saw that Mahindra Manulife, it has generated high returns, but again with low volatility, right? The highest volatile among these peers was Tata retirement savings, right? So seems like a great alternative to look into as well when you're considering equity, debt, or like a diversified product in the Indian market. This fund is probably one of the interesting funds that I've reviewed so far. I hope you enjoyed it. Thanks a lot for watching. See you next time.